everyone, Maurice here. Welcome to Tanks Invest, where we're going to talk about investing, finance, and professional developments. For today's videos for entertainment purposes only, the stock that we'll talk about today would be Tesla, TSLA. As you know, across the board for last week for Tesla, it was basically selling off ever since last Monday all the way to Thursday. Friday we had a bit of a rebound, minimally about like 5% across the board for a lot of the growth and tech stocks. However, as of today, Monday, on May 17th, Tesla was down about 5% at one point, and currently about close to market closing at 4 p.m. on Eastern. Right now, it's slowly showing some sign of recovery, trading around like $570. But overall, we've still been down by close to about 10% so far. So I'm going to go through a technical analysis to see where I see the stock going from here. What are some of the resistance level we should be looking out for if you're interested in buying into the stock? And my year-end price target for year-end 2021 based on the exogenous factors that we're going to be seeing going forward. So stay tuned, stick around, and let's make some money. Alright, so take a look at the technical analysis real quick for Tesla, ticker TSLA. Look at the 5 days chart based on last Monday all the way to today, so a week from just a week of separation so far. You can see that last Monday we were trading around like the $624 level at open or like at 10 o'clock. So we rally up. We had that initial bull push, but subsequently sold off immediately because there was like basically a lot of consumer investors bought in because they were expecting something to be positive ahead of the CCIV report that came out last week. It subsequently pushed back down because both institutional seller and also because of people just being scared of that big red candle that pushed everybody to sell off. So that drove some fear among people, right? And ever since then, we kind of consolidated sideways, but more like a downward escalator motion. And the reason because of that is because based on the public consensus so far that the CPI report came out, it was thinking more leaning towards a negative spectrum, right? And when it came out, the consensus around the what the report actually came out to be actualization was not that positive or not negative at the same time. However, people were kind of overreacted and they were like, oh, that's not that bad. And that subsequently generate this V-shaped recovery that you see here, right? You see this dip. The report came out, it come back up and bouncing kind of up and down in a more of a sideways consolidated motion, right? So now we're seeing that ever since we hit that $559, $560 level, today we kind of testing it on Monday because the inflation scare that is baking into the stock price is getting more and more severe as the media affectation is talking about this every single day, and it's really scaring people away. And it seems like the chip shortage is not really progressing, and also on top of the tax adjustments, this is going to be further putting pressure on, and on top of the monetary policies and the foreign trade that we have between China and US, the tension seems to be rising at the same time. So a lot of media affectations is negative so far, that's pushing the stock down. So let's take a look. So look at the five days chart. You can see it's definitely a downward shape. Right now we're just bouncing and testing this again. So looking at this on a daily perspective, you could see that right now, this is kind of worrisome to me. You could see that we had that rally up from last year in Q3, Q4, dip down to this level of, again, right, the 560. And right now we are testing this one more time, right? And if we break that, this is going to be a free fall from here, right? All the way down to, again, like the $490 level or like the $500 level, which makes sense. You could see that on the red level right here. This is basically a psychological resistance that people were contemplating on pushing it upward back in the day when it was like November. But now we're kind of in the reverse psychology perspective that is pushing down. So the next level for us to test would be the $500 level if we break this level. But good news is that we've been kind of testing this for quite some time now. We test this once, so this formed one resistance level. And then another bounce, and then now it bounced again. So you could see that we tested this once, 2, and 3 times so far. And right now you could see that the stock is kind of struggling. Consumer investors or retail investors, and also some institutional investors, you could see that the line is not that big. So the volume is mostly coming from retail investors. that is struggling to sustain the price to that level, right? So contingent on no more negative media affectation, contingent on no more crazy exogenous news about like Elon Musk saying something crazy about Tesla again, and contingent on getting more progression going forward with respect to the chip shortage and the Chinese tension, I think we should be bouncing it upward from here, right? I think for us to break that, it would take a pretty strong sledgehammer for us to get through this, and knowing the fact that we're kind of struggling throughout the whole day today. It was literally the whole entire day kind of bouncing up and down at this level right here, right? So this is definitely an area to look out for. On top of that, last week, 4 days out of 5 days was a sell-off day, right? So we sold off so much already, again, right from the top all the way down here, right? So that was a lot of selling pressure to be baked into already. So for us to get more of a down week ahead of this week, from the May 17th all the way to the 21st, that's going to be pretty much of a stretch, right? I think anything should happen in a logical perspective. I think if that happens, that would just not be ideal. Firstly, it wouldn't happen naturally in the currents, and that will actually form a pretty significant outlier into how we're trading so far. So the likelihood of that happening would be very low, to be honest with you. But if we do break that and things happens right in the stock market, especially with respect to the news and how it's so manipulative nowadays, that the next level of resistance will be the $500 level, right? And if we break that again, the next level will go all the way down to this gap that needs to be filled at the 407 level, which to be honest with you, that's pretty scary to me. But I think the likelihood of that to be happening, to basically down more than 80% from all-time high, when Tesla has been growing exponentially, beating the numbers, and in terms of like the demand is, the supply cannot even meet the demand, is sold out completely. So they're gonna have a killer earnings calls next quarter coming up, like that already. So right now, this is just a lot of fear with respect to the macroeconomical outlook. Has nothing to do with business fundamentals, which as an investor for a long-term perspective, that's the perfect time to buy in. And I think that's the perfect time for me to buy in, and I'm going to continue to buy into this dip and continue to build out my position going forward. Alright, just to recap on all the numbers that we talked about today, I think with respect to Tesla, I think currently the price is 565 or somewhere around like the 570. It is at a discount right now, and we've been sold off so significantly already, despite all the negative media affectations. Again, the media affectations or the publications are manipulated by hedge fund managers and Wall Street, right? They want you to sell. They want to make it seem like it's like the worst in the world, and they know that people trade and transact based on emotions. And this is the exact time to buy it. You have to call their BS basically. So 565 is a great price to buy in. And the next level, if we go back to like the March 8th crash that we incurred, the 545 would be the next level for us to get into. But I think that would be a pretty stretch level for us to get down to, contingent on knowing the fact that we sold off again, right? 4 days out, 5 days last week already. For us to do that another consecutive week, that would just take some massive downward pressure for corporations to sell or something really negative to happen again, right? But knowing the fact that the CPI report is not going to be coming out for another 30 days, and also I don't see any like Federal Reserve speech that's coming out that could hinder the perception going forward. I actually foresee the next 30 days to be, somewhat of a good day, good week ahead of us that is going to be building some momentum around. I believe some equity research reports going to come out. I believe some news is going to revolve around like the chip shortage that's going to come out that's more positive. We might have a couple more down days because like the hedge funds just want to push the stock as low as possible so they can load up. But right now, you can never really understand or have a perception of like what they're trying to do, right? They're always behind the doors, they're always behind the scenes, so you cannot really read into it. But you can read based on the technical psychological charts that we have in front of us. And I think right now, if you have to call that BS and you want to buy it now, then further dollar cost average if it keeps going down, because the more it goes down, the recovery is going to be extremely enormous. The V shape is going to be extremely sharp that you don't even know what to expect. So right now, you have to just prepare yourself. Be prepared, not be surprised, right? So buy now, further mitigate your risk by buying it down on the way down, and eventually it's going to ride back up. So I think if we get down to the 535, which is very unlikely, I think it's so crazy for even go below 550, to be honest with you, or get anywhere close to like the low 500s. That if you buy at the current price at 565 right now, with the end price target of $950, which I think is still conservative, in my opinion, I actually see this company to be $1 trillion by end of this year. That's 68% upsides or 1.7 times is not a bad return at all. Pretty good return, to be honest with you. Alright, so that's it for the day with respect to the technical analysis and some of the insights and research that I've done so far. Really appreciate you guys dropping by again. Please kindly subscribe, hit the like button, and also hit the bell notification to watch out for my next video coming up. Stay tuned for the next video, and I really appreciate you guys for sticking by. Thank you so much. Take care. Bye.